Well, welcome to this week's Q&A. Hope everyone's doing well out there, all the Aussie expats around the world. And this week's question follows on from, I guess, lots of information that's been in the news lately about what's happening in the Australian residential property markets around the country, and also from a number of our clients, particularly in Sydney, or those from overseas looking to invest or buy a home in Sydney. And that's really about pricing. So today's question is, can house prices keep increasing at the rate that we saw in March? And for those of you who listen to our podcasts and our programs, you'll know that March actually had the fastest rate of increase in property prices in Australia in 32 years. Particularly in Sydney, when we looked at the rate of increase there during the month of March was 3.7%. So that's extremely high. If we look at it in context of our question, that would mean if it kept going at the same rate over the next 12 months, Sydney prices would increase by circa 45%. Now I think we all recognise that that's not a massive probability or possibility even, as affordability issues would creep in and many other factors would seek to potentially derail a natural linear progression of that sort of scale. So if you look at the other state capitals, and particularly eastern seaboard ones, I mean, Melbourne was up 2.4% in March, as was Brisbane, same 2.4%, and nationally house prices rose by 2.8%. So really strong rates of growth, and clearly the rate of growth has to decline, otherwise it would be totally unsustainable. But if we look at the latest figures that really have just come out for April, we see that there has been a decline in this. So national housing prices increased in April 1.9%, as opposed to the 2.8% in March. And that's still a very high number, still the third highest rate of monthly increase since the 1980s. So, you know, we need to be cognizant of what's happening here. And I suppose our viewer's question was really something slightly different. The underlying question is, you know, really what's going to happen? Are the rate of increase is going to stop so I can buy into the market? And I think that's the really important question that people need to be focusing on, because the rate of growth is only really important to someone who wants to transact in the immediate future. So if things are going to go up 3 or 4% in a month, obviously it's better to transact prior to that happening for any sort of sustained period than not. If you're just watching the market, then the rate of increase is not as important. It's more the overall quantum. How much is the market going to go up? So, you know, no one has a crystal ball, but if I look at that, the trend is still going to continue. It's a strong upward trend in terms of price growth, I believe. And the reason behind that is also quite sustainable at this point in time. If I look at auction clearance rates, they're still above 80%. You know, and the level of stock on the market is still low. So there are lots of underlying factors, I think, that are going to continue this push up. And it's more important about, I guess, thinking about your timing, because to me that still points to an annual price growth rate of overall about 20%. And if you're going to buy something, whether it be in Sydney, Melbourne or Brisbane, and you're definitely going to do so, then if you can do that sooner rather than later, if these events come to pass, obviously you're going to be the beneficiary of some of the tailwinds of these rises that you'll actually then enjoy as a property owner. Conversely, you know, I've seen clients who have been looking to buy something for the last 9 months. And as many of you will know, I've been saying this for all of that time, at least, if not slightly longer, that people should be acting on this information that, you know, that we can show you. So what's happening there is the market is moving away from these people. And at the end of the day, some of them throw their hands up in the air and say, oh look, I'm just priced out of the market. But what generally tends to happen is that they will have to eventually transact. It will be much later than they should have, and they'll be paying potentially a lot more money for something that's a lot less value. So that's not really an ideal outcome, but that's really what this question this week is about. It's about valuation and the overall market. When can I get in? What should I be doing? Will it stop? And the answer is no, I don't think it will stop. As a counterpoint to this, I mean, the other important thing that people should recognise is that we look at Sydney and Melbourne, and I look at this in terms of population growth and population size. Now, they are obviously the two largest cities in Australia at almost 5 million, or roughly, inhabitants. But if we look at the rate of growth of that population over the last 50 years, I mean, most people would think that Sydney and Melbourne have been the shining lights. They, in fact, haven't. Cities like Brisbane, Perth, Canberra have increased the size of their population at a much greater pace. And I think going forward, that's something, and that's why I'm bringing this up, people should be thinking about, is looking at where this population growth is going to continue to occur over the next 12 to 24 months, while Australia still has closed international borders, there are no international students coming in, and all the other things that we already know. An important issue, and something that we cover off in our quarterly property market and finance reviews, but something for everyone to keep an eye on. So I hope this has been some useful information for all those expats out there and Australians at home who are looking to enter the Australian residential property market in whichever city or regional area you're looking. And we'll see you again next week at next Tuesday's Q&A.